Hi, everybody. This is Dan Sheridan at SheridanRiskManagement.com. It's Friday, August 2nd, and it's around lunchtime. It's about 12:18 Central. And I thought I'd do something different today. What I wanted to do in this very volatile week, as SPX is down just from last Friday, July 16th, from the last 7 days, we're down 300 and so points. We've come from July 16th, 56.69 to August 2nd, 53.35. And that's in a little over 2 weeks, right? That's a little over 2 weeks that we've gone down about 5.8% off the highs. In perspective, again, that's nothing, right? When you look at from October 30th, less than a year ago, we were 4,100, and today, August 2nd, we're at 53.32. That's up 30%, right? Right? We're up 1,232 points, even with the last, week or two of downturn. So, it's all perspective. I think the scary thing for a lot of folk is when you look at the last 2 weeks, 2.5 weeks, we've had the most I've seen in a long time. I mean, this is a price chart, and then I want to get into some strategies. If you just make this 6 months here, if you look at the last, 1, 2, 3, 4, 5, 6, 8, 10, 11 days, look at these big candles. This is the most days I ever remember seeing in years. If you take 10, 11 trading days, the most days where we had 100-point ranges or around 100-point ranges in SPX. So that means the distance between the high and the low a day in a day. And that's why this indicator called ATR, average true range, which measures that distance between the high and the low, is just jacked up, right? Obviously, along with the volatility. So what I wanted to share today a little bit is just hopefully give you some encouragement, but also, we do a lot of range-bound trades at Sheridan Risk Management, but we do some speculative trades and long portfolio trades, covered right type stuff. But I want to show you, we have a live trading community, and these are just trades that we put on this week, right? So even in this wild, wacky environment, which we've been very cautious of with range-bound trading, because it really hasn't been range-bound, these are trades that we looked at that we felt comfortable with, even in this extreme volatility environment. So let's go through. There's just 4 trades I want to share with you of live trades that put on this week, and these are be trades that probably I'd be looking to go back to the well some next weekend, because I don't think the volatility will go away. But so again, for this environment, and so let's start with this was, and I'll explain it to you. This was a double long diagonal. This was the exact trade that we put on. This would have put on, just to give you context on each trade, and then I'll explain it to you. This was put on July 31st. July 31st was Wednesday. And just to give you a little bit of perspective, SPX closed at 522. And right now we are down here at 53.26, down 120 points. And this is today. So on Wednesday, VIX was around 16, I think, at the end of the day. And so we look every day and just say, okay, what trades would I be comfortable today with volatility? What's going on in the market, range bound or spec? But this is range bound, and it's called the double long diagonal. So I'll walk you through this. So we bought, as of Wednesday, did August 19, we bought, sold August 6th. That's a mixed month spread, a little over 2 weeks till expiration. So mixed month spread, this would be when I say the word diagonal, this is a double long diagonal. That just means mixed month. I'm buying the further out, and we're doing different strikes. So it's not all the same strikes, calls, and puts. So you can see in calls, different strikes, puts, different strikes. So double diagonal is on this trade on the call side, I sold the 56.10. And sold the 54.90 put. And these are all trades we put on during, we put them in the chat so people can see them and they're recorded. We get the information out to people. And as I said, the close was around 55.22. So we were kind of in the middle there. And what's great is for a volatile environment, very low gamma, just about no gamma, or minus 0.01. And what does that mean in English? What it means in English is this, that if you look at, and I'm going to make these price slices at 2% because the market's been a little wacky. So if you look at a low gamma, what it means is that as we go up or down 100 points in the SPX, our deltas don't change much. So for a range-bound trader, that's music to our ears. And then it's also long vega. So this trade, even though we're way out of the profitable area here, if you look right here, which we paid $9.30, it's up money. Now, I think the most of those in the community got out of it yesterday for maybe 6% profit. So maybe they sold it at $9.85 or $9.90. But, you can see that $9.30 is actually, you probably could get a little better today than that. So bought at $9.30, and that was on just Wednesday. So something in a whack, we've been in a volatile environment for 3 weeks with these big range moves. So that's a double long diagonal. Oh, you know what I didn't tell you? So these are the short options where I place my long options. On the upside, I placed it 5 points my long before the short strike. And on the put side, I placed my long put at, where did I place that? 5,500 before my short put. So really, I'm buying more extrinsic value. And it gives me, this is like a battle tank. In a volatile environment, and it does really well as the volatility increases. So that's a double long diagonal. And that did well this week. These are basically the trades we put on this week. Now, here's an interesting one, and I'll tell you for different purposes. This was, I call this the Sherman tank butterfly. And this one was put on Tuesday, 7:30, that's July 30. And you can see we paid $9.50 for this. So that's your cost, $950. And at the end of the day on Tuesday, the 30th, SPX closed at 54.36. And we did the short strike here of 54.30, of 54.30. And we bought some in the money calls against it, 53.60. And some out of the money calls against it, 54.95. I call this the Sherman tank. And it just gives you a lot of protection on the downside. The distance between your short and your in the money call is 70. The distance between your short and your out of the money call is 65. So this is a little more stronger butterfly, a different butterfly I use when markets going down and volatilities are higher. But just to give you an example, this 70.65, And right now we're at 53.23. Now this is a SEP 6, so we have some duration. It's another thing, like to get a little more duration when the market gets crazy, because again, you can see this gamma is minus 0.01. Again, just means we move up or down 2%. This can handle the heat. But if you look at this trade today, 950, really, it's kind of in this type of an environment, when you think about, this was put on Tuesday, we're Friday, we've dropped 120 points, way outside the profitable area. And this thing's like down 20, 30 cents, 20, 30 bucks for the most part. And it's just, it's because we're starting out a little bit short deltas. It's how we structure it, but we're delta neutral now, right? Now I got out of it for basically very small loss, but it gives you confidence that you can have a pure range bound trade on. You have a huge move and barely gets scraped. All right, that's the other trade. Let me get rid of a couple of these for you. Just two more trades, one more here, and then one in SPY. This is called it's your basic skip strike butterfly. But what I like it's more range bound. Your deltas are pretty close to zero, and maybe I was one delta short when I did it. But you can see here, I did this on the 29th. So this was on Monday of this week, the 29th. And on Monday, the 29th, we closed at 54.63 in the SPX. Again, we're down 140 points. But I did this purposely because we've been up. What can I put something that's relatively delta neutral, gives me no room on the downside? And so I did this when we were at 54.63, about 156.25. Sold two 56.30s, skipped the 56.35, and bought a 56.40. So I did it for about $1 credit. The margin is only at $405, right? And right now it's trading at 20 cents. So that did well. And then the last one, what I like, this is something we did in the trading pits a lot at the CBOE. This was just an example of a ratio back spread. So this was done in SPY, back ratio. And this was done 7/31, which was Wednesday. So if we look at the charts, Wednesday 7/31, we closed at 550.81. So if you look at 550.81. And so what I did is, so we were probably around this area, and I sold, here's just an example of one that we did. So 4, AUG9, so relatively close in 555 calls, bought 6, 564 calls, so $1.69 credit. So on the downside, no risk, you get your credit. Here's your graph today. This would be your graph at expiration. So I did that for $1.69 credit, and it's the $1.69 credit went to 24 cents. So those were trades we put on this week. And I want to invite you, let me just show you this real quick. I want to invite you to next week. We'll be very similar. Join us next week. Here's where I'm at. If you go to Sheridan Risk Management here, and I'm Dan Sheridan. And if you go there and here's your homepage. If you click subscribe, and it gives you some information. We do class, live content at 9:50 and 2 every day. Also do mentoring sessions around it, but 9:50 and 2, and we're mostly going over live trades, risk management, students trades, teaching material. You can see what you get, the pro plan. All are recorded classes, so you get everything. There's no 12 different levels to do. And so all you would do is it's $194 for the month. You try and cancel anytime. You can email me, Dan at Sheridan Risk Management, where we want what's best for you. The first thing you do is you just sign up, put your name and email and password, and then, because that'll create an account, then you just fill out the stuff, and you can join us next week. And that's just a sample. I just want to give you a sample of those are some of the trades, and we're working together as a community on these live trades. But this isn't, it gives you what you like with an alert service, so you can see the results and all that. And it's very transparent, but it's a ton of teaching. There's no mystery here. The main thing is my goal is to help you become a craftsman. So join us for a month, and we'll be starting Monday at 9:50. All the classes are recorded, and we'll get the information out to you. So thanks, everybody. Appreciate it.